history of finance. Finance, in its most basic form, is about managing resources. Its roots stretch back to the dawn of civilization. Before the invention of currency, people relied on bartering. Bartering involved directly exchanging goods or services. Imagine trading a basket of wheat for a clay pot. This system, while functional, was often inefficient. The need for a more standardized medium of exchange led to the development of commodity money. These were goods with intrinsic value, like salt, shells, or livestock. These items served as a common measure of value. Around the 7th century BC, the Lydians of modern-day Turkey introduced the first true coins. These were made of electrum, a naturally occurring alloy of gold and silver. Coinage offered several advantages over commodity money. Coins were durable, portable, and easily divisible. They also had a standardized weight and purity, guaranteed by the issuing authority. This made transactions much simpler and more reliable. The use of coins quickly spread throughout the ancient world. The Greeks, Romans, and Persians all adopted coinage systems. This facilitated trade and economic growth on an unprecedented scale. As commerce flourished, so did the need for banking services. Temples in ancient Mesopotamia and Greece served as early forms of banks. They accepted deposits and made loans. Private banking houses also emerged, particularly in Rome. These institutions offered more sophisticated financial services. They facilitated money transfers and even provided credit. The collapse of the Roman Empire led to a decline in banking activity in Europe. However, banking continued to thrive in the Islamic world. Islamic scholars developed sophisticated financial instruments, such as checks and letters of credit. During the Middle Ages, trade began to revive in Europe. This led to a resurgence of banking activity, particularly in Italian city-states like Venice and Genoa. These cities became major centers of commerce and finance. Italian bankers developed new financial techniques, such as double-entry bookkeeping. This allowed for more accurate tracking of assets and liabilities. They also pioneered the use of bills of exchange. Bills of exchange were essentially promissory notes that could be traded. This facilitated international trade by reducing the need to transport large amounts of coins. These innovations laid the foundation for modern banking practices. The Renaissance saw a further expansion of financial activity. The Medici family of Florence became one of the most powerful banking dynasties in Europe. They financed trade, supported the arts, and even influenced politics. The age of exploration brought new opportunities for financial innovation. Joint stock companies, such as the Dutch East India Company, were formed to finance voyages of discovery and trade. These companies raised capital by selling shares to investors. This marked the beginning of modern stock markets. Investors could buy and sell shares in these companies, allowing them to participate in the profits and risks of overseas ventures. The 17th and 18th centuries saw the establishment of central banks, such as the Bank of England. These institutions were responsible for managing the money supply and providing stability to the financial system. They also acted as lenders of last resort to commercial banks. The Industrial Revolution led to a massive increase in economic activity. This created a need for more sophisticated financial instruments and institutions. Stock markets became more organized and regulated. The 20th century witnessed the rise of modern financial theory. Economists developed models to explain how financial markets work and how investors make decisions. This led to the development of new financial products and strategies. Today, finance is a global industry. It plays a critical role in allocating capital, managing risk, and facilitating economic growth. Financial markets are interconnected and complex. The rise of technology is transforming the financial landscape. Fintech companies are developing new ways to provide financial services. Blockchain technology and cryptocurrencies are challenging traditional financial institutions. The future of finance is likely to be shaped by these technological innovations. as well as by the ongoing need to manage risk and promote sustainable economic growth. The story of finance is far from over.